Reckless and absurd monetary and fiscal policy has created bubbles, the likes of which the world has never seen. And today we will discuss the crash of Canada's real estate. You came here for the truth, so let me unveil that for you. This is clearly not a popularity contest because this information may upset a few individuals, but this is a channel for the truth. So let's dig into it. Right away, we're going to look at Canada and take a look at Vancouver and Toronto and look at the average housing prices there. Look how absurdly high that in December 2014, the average home in Vancouver costs $820,000 Canadian. And then you go over to Toronto, a very reasonable $556,000. The prices are still increasing, not quite as much as before. However, they are increasing year over year still, even though there should have been a slowdown a long time ago. See, markets are okay to go up. There's nothing wrong with a market that increases. However, if it goes up for too long, there can be problems because when you have these policies put in place by the government to prolong the bubbles, then you have a problem. I'll get into exactly why that is the case today. Just wanted to show you the actual prices and how high they are in these two cities in Toronto. So let's move into a bunch of charts. I'll go through them quickly. You can look at them for yourself. They'll be in the description under the sources, or you can alternatively pause the video and read these for yourself. So I'll just go through them quickly. How over or undervalued are home prices today relative to historical averages of the home price rent and home price income ratios. These are very important statistics that you need to understand to determine how expensive real estate is. I use this in my book all the time to show how expensive it is, and you can see Canada right at the top of the list, and that's according to historical averages. And you were talking about an extremely high rate, and that's according to not just one but two separate indicators in this chart right here, above many other countries here. And that is just going to show you how expensive it is for the individual citizen. But wait a minute, how can they possibly afford that? Well, let's get into that in a moment. I'm just going to show you some more charts. Home prices overvalued in Canada and Australia, and they're basically saying that they're actually more expensive than New York. Look at Vancouver at the top of the list, Toronto not too far down there, more expensive than some of the biggest cities in the world here. So we'll move on. And this is Canada is in serious trouble. Household debt to income. Right after the financial crisis, people just chose to take on more debt. And that is exactly what's happened. You can see how in the US, in fact, where people are trying to get out of debt, perhaps they are forced to, but in Canada, of course, nothing bad ever happens in Canada. Therefore, you might as well take on more debt. So I really want to get into this sooner, but I'm going to have to wait, just showing you exactly why that's the case. But let's look at more charts. It is not only the housing market that is worrying Canada. Let's look at the credit card loans, mortgages, personal lines of credit, and disposable income. All of these lines, lo and behold, on a upward trend, disposable income being the lowest one there, barely moving up. And then you look at personal lines of credit sparking up significantly, particularly after the financial crisis. All forms of debt have increased, and this goes for Canada as well. Everything doesn't revolve around the US. We have to look around other countries as well. I get emails from literally all over the world, and people are telling me the the inside scoop, and that is that we are all in the same situation. Remember that you may be in your country, wherever that is, and you think that it is just you as an individual, perhaps your city, perhaps your country, but I assure you, these problems here are being felt all over the world. I've covered on this channel before the statistics showing you how Canadians have never been in this much debt ever in history. And this is very, very dangerous and very worrying to me. Multifamily construction at record highs. And this goes to show you that people are not able to afford the homes that they were able to back many years ago. So we're moving people into more smaller spaces. People are buying condominiums versus moving into their own detached homes. That's because simply the prices have become unaffordable. These are very important statistics right here, and you can use that for your own country. Look at these statistics that I'm showing you here. If you're interested in how your country is doing, you can use these statistics as well. So look them up for yourself. 7% of Canadian workers work in the housing construction, double the share of the US. So look at that difference right here, particularly after the financial crisis. Many individuals in the US were forced out of work in the housing market, and some of them definitely remain unemployed. Others will choose other occupations. But in Canada, a very high rate of the people are working within the real estate market, essentially because houses are continuing to be built. In my book, I talked about the issue with the fact that it has become unaffordable. And I said this, talking about the disparity between the amount of money that we earn and the cost of housing. To me, this is the most important indicator of real estate prices, because if they become unaffordable to people, people will move into smaller locations and they will basically get into more and more debt in order to buy a place. For 20 years prior to 2000, a home would cost about 3 to 4 times the annual median income in Canada. So your salary, you multiply that by about 3 or 4, and you get the average house price. And that's how it was. You saved up for a few years worth of your salary, you could buy a house. Today, the prices are pushing up to as much as 11 times the annual median income. It's a historical, completely abnormal and absurd, and it only means one thing to me, and that is a bubble. And this goes just into the real details. Look at the statistics. Don't just try and tell me that we have people moving into the house, people are buying up the houses. We need to look at the statistics, not just 1 or 2 or 3 indicators. Let's look at every single possible indicator and weigh out the possibilities. So this, there are so much more here I want to get into, but I have to move on quickly. With the Bank of Canada rate cut, which just happened in 2015, sub 2% mortgages are coming to a bank near you. This information is out of the Financial Post. Now think about this for a second. We're moving down into the territories that are essentially at zero. Look at what happened in Denmark. You have negative interest rates on the mortgages. Look at the bonds that are being given out in certain countries that are negative yield. Can you believe it? Money is worthless at this point. But essentially what I want to get to in this video is to show you that money is being given away for free, essentially. So no wonder people can take on debts and they can buy houses in Vancouver that cost $800,000 and well over $500,000 in Toronto. And this is the case for so many cities around the world. When you have interest rates this low, they will allow people to buy things they simply could not afford. Now, what happens? Let me ask that what if. What if interest rates move to a rate that is at historical averages? Just a historical average, not even a high rate, not even what happened back in 1980. Forget about that. Let's just take an average over the last, let's say, 100 years, and you were to average out all the housing, the mortgage rates. You would have mass bankruptcies, foreclosures, and a collapse of the housing prices. So they need to keep the interest rates down. That's what consistently I keep hearing. They'll just keep the interest rates down. They're not going to increase them if they know it's going to crash the economy. Well, what a genius idea. They'll just keep them down. But is that without its repercussions? Absolutely not. They have to go into the market. In the US, they call it open market operations. Essentially, the same tactic is being used with every central bank. They go into the market and have to actually buy up their own debt, and they force the interest rates down. That means that they are printing money every time they want to keep the interest rates down. If they want to continue to do so, all they will do is increase the prices that you and I pay for food, that you and I pay for our electricity. Inflation cannot hide for long. We're seeing this right now. The prices have become completely unaffordable. Look at all the statistics here. We have interest rates down at rock bottom. If you want to know when the real estate market will really crash, just look at the interest rates. That is the biggest indicator. Now, the further the rise goes up, the harder it's going to crash right now. Oil is obviously an extremely important commodity, and the Canadian markets as a whole, the economy, is very dependent on the price of oil. That's very clear, and we can see this with what's happening with the Canadian dollar right now. Should oil remain low, exports will also remain low, and that means that the Canadian housing market could take a big hit. Look at what's happening in the oil regions in Canada. We have already seen new home sales declining significantly, and they're unable to sell off their properties. So that is very interesting information. We'll see where that goes. This could very well be another nail in the coffin, and it is simply a matter of time. They are pumping up the real estate bubble in Canada to levels never seen before. The prices are so astronomical, people cannot afford them, and this spells one thing: bubble. And I hope that you found this video informative. If you did, please give me a thumbs up. And I hope you will be a subscriber on the channel if you're not already. Of course, don't forget to become an insider. It's where I give out all my best intel for free. That is available at themoneygps.com. You just scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.